morning, good afternoon, good evening, wherever you are. Welcome back to another episode of the Merging Life and Money Show. I am your host, Marie-Jo César. Today, we have two extraordinary brothers who are transforming the way people think about personal banking and wealth building. First, let me introduce Jonah Dew, a dedicated IBC practitioner and entrepreneur based in Greenville, South Carolina. As a business administration graduate, Jonah has leveraged his experience in banking and insurance to help families take control of their financial future. Since discovering the infinite banking concept in 2016, he's been passionate about showing others how to become their own banker and build lasting generational wealth. Joining him today is his older brother, Jeremiah Dew, a dynamic speaker and serial entrepreneur whose financial journey is quite remarkable. After graduating with a communication degree in 2006, Jeremiah embarked on an aggressive debt reduction mission. His path led him through entrepreneurship and family life. He's now a proud father of four to discovering the infinite banking concept, which helped him triple his net worth in just 2.5 years. Together, these brothers have created an educational platform that is demystifying high cash value whole life insurance as a private banking system. They travel across the country, sharing their knowledge and helping others achieve financial independence through proven strategies. Please join me in welcoming Jonah and Jeremiah Dew.
Well, awesome. Thank you so much for having us and the great introductions.
No problem. Thank you both for being here today. I know our listeners are going to gain tremendous value from your insights. So before we dive into our conversation, I want to let our listeners know that we will be covering three essential topics that could transform their financial future: wealth building, financial management, and the infinite banking concept. Each of these areas plays a crucial role in creating lasting financial success, and I'm excited to learn from your experience and expertise. You know what strikes me most about both of your stories as I was reading your bio is a strong emphasis on stewardship and family. And that leads me to my first question for Jonah. You mentioned being good stewards of wealth as one of your core values. Really shape your approach to wealth building.
Yeah, what a good question. One of the reasons that I stand by this idea of stewardship and try to teach that to the people that I have an impact on who are interested in listening and learning more about how to be better stewards of their money or what to do as far as take the next step in their financial journey is because I just have this belief that we work really, really hard. We give up a lot of time and energy to make money. Most people go through life with the idea that I have to trade time for money. Now, again, there's a significant amount of people who still find out a way that they don't have to trade so much time for money. But generally speaking, when you have to give time up in order to earn money, you, of course, have to take time away from something else. Maybe your family, your friends, your church, your charity, whatever thing that you like to give an outreach to. And so one of the reasons that I love stewardship is because I don't want to have to continue working, continue giving up time in order to earn money. Wouldn't it be really nice to give up time or energy or effort one time or less times than every single day in order to retain the wealth, retain the money? And we teach that to people pretty significantly anytime that they plug into our platforms. We talk about, man, why don't we try to find you, set you up, work toward this idea of earning money once, saving it, having it, keeping it, and being a good steward of it, put it in a place even where it can grow. And that way you don't have to continue trading time for money, right? So there's this idea, of course, of when you finally make it and you can retire, so to speak. A lot of people shot for this nest egg approach. Let me just have a bunch of money and I'll hope it lasts. But at the same time, there's folks who go for the cash flow approach, which is really just, well, if I can generate enough cash flow with the money that I've earned or have already earned, retained, kept, that can pay the bills, then I can actually have the lifestyle that I'm looking for. I can go do lots of other things now as opposed to waiting for some year. So that's a long answer, but man, I love stewardship
No, I
because
mean, you are correct, particularly nowadays where everything has to be instantaneous.
right.
We are everyone's keeper, and that's really, really important. Now, over to you, Jeremiah. You tripled your net worth in 2.5 years. Can you walk us through the key decisions that led you to that remarkable growth?
Sure. Well, first off was getting educated. When we learned about what we teach now, which we'll get into, is your third topic, the infinite banking concept, we took action. Now, that wasn't because we're smarter than everyone else at all. We didn't make up this concept. It was developed by a man named R. Nelson Nash well before we were introduced to it in 2015 and got started in 2016. Secondly, Jonah told me, hey, we got to start now, because I was not thinking that we needed to start right away. So I'm not sure if even between us, I hold all the brain power. So when he told me we had to start, which for me was March of 2016, what I did was I started one of these contracts that had the guarantees for growth and liquidity. We'll talk about it a little bit later. But a year and a half later, I had also started it on my family. You mentioned family is important to us. And the wife and kids at that time, there were two, got policies as well. These same contracts ended up in our family. So we ended up with 4 of them. So our dollars are being stored in this place that Jonah was talking about, which was generating guarantees, growth, and cash flow for us. Because of that, and because it's housed in this special tool that leaves a legacy, what we did was we bought money. Pennies on the dollar. The dollars I put in today bought money for my family tomorrow. So the net worth immediately started to go up and have a complete shift from losing to, or as Nelson Nash would say, having a headwind pushing against you to make your flight path slower, and a tailwind that pushed you forward. So because of that, here, I'm trying to be somewhat generic. I don't want to give away everything because I heard your 3 things that we're going to get into. But because of that, what I was able to realize was I've got money coming toward me now. Because of this tailwind, I've got money coming toward me right now and in the future, guaranteed forever, because there's going to be my life and there's going to be a second generation with the 2 kids that we had at the time. So that is kind of the answer to how in the world did I have that crazy shift. I didn't even have debt. That's another thing that I'll bring up, but I did not have debt. I was just a cash buyer. Didn't use credit cards at that time. Didn't have any consumer debts. Did not own a home. So this was a huge shift when I realized what was going on.
Thank you for that great answer. And I really like the analogy of the tailwind.
Yeah, when you have something pushing you toward where you want to go, you'll get there a whole lot faster.
And it is so important what you mentioned, the fact that you did not have any debt, right? So, and that's a key element that nowadays people tend to forget. They use their credit card as a part of their income.
Right, they do.
Sadly. And they do not realize that the compounding rate of interest does not work in their favor when it comes to building wealth. So, as brothers working together, how do your different backgrounds in communication and business administration complement each other when helping clients build wealth?
Well, first off, on the familial standpoint, I mean, we can butt heads. You know what I'm saying? So I'm glad you asked it in terms of like backgrounds in communication and business, because not backgrounds of growing up in the same house. There tends to be some conflict from time to time, being in business with a family member. But yeah, so my background was in speaking and communication. And because of that, I had this idea that we could use production, what now we do on our social platforms at the Cash Compound, which is our educational community, or the Banking Bros, our social channels. What we're doing out there is putting out marketing content. We're teaching, we're doing it in 1 minute chunks, we're doing it in hour-long chunks. And I said from the beginning, I think we should be utilizing social media, video, teaching tools that are online to help people. So when we started in 2017, we had that in mind. And by 2020, I was full-time helping Jonah, who was on the back end, and he'll tell you about his business background and how he helped people get started with their tool once they had it.
Yeah, sometimes I make the joke, because we are brothers and we work together. I say that's why we put our offices on opposite ends of the hallway, right? Because there is that butting head idea of being family and working together. But just to follow up on what Jeremiah said, if you're going to be great at communicating and being the face of a social media platform and making a 1 minute video or a 1 hour video, there's got to be somebody behind the scenes who maybe edits the video, posts the description, right? Make sure the platforms are lined up, responds to the inquiries or the emails that say you got to register for this and sign up for that in order to do or have that platform be successful. So there's really a compliment. There's an old analogy where people talk about having driving a bus and sitting on the bus and having the right seats on the bus, right? And I think that that really plays a part into what we do. It's all about operating a business to your strengths. We found out in the last few years of being in business together that we do have some really cool strengths, but we've also got a lot of weaknesses too. And what that means is we've got to get other people, help, great people to sit in those seats on the bus also, because, we can't do everything. Most business owners, small business owners, figure that out at some point.
Right.
They say, well, I can do some things, but I just can't do everything. So I'm going to have to go get some help. But having two heads are better than one. Being in business with someone who's got the same end goal and vision is awesome. But again, we are still just two people. So we do our best with the gifts that we're given and get help along the way.
Well, one thing I must say, you guys are for real. It's, you have to be candid and you have to be genuine with yourselves to even think about helping anybody else.
It's very important to do that. Yeah. To really realize what you're good at and use your own personality for this and not try to be someone else. So I think our social channels prove that there's a lot of personality in there. So
thank you for that great answer. It's so very important, particularly I would say now with everything else that is happening in this country. Family better pull together and get going on what's important for them. So tell me, and any one of you could take that question, what's the biggest misconception people have about building generational wealth?
I'll start. Okay, I'm going to say their biggest misconception about building generational wealth is that what they're currently doing. So the average Western American here, what they're doing is working a job. It's probably, let's say it's a family. So we've got two partners here working a job. They probably have kids. They probably have a mortgage. They probably owe on a car or two and credit cards. The biggest misconception is what they're doing is going to work. First off, I think that is a powerful problem in our country. What they're doing is going to be good enough. And I think many people are starting to realize, because of longevity, healthcare costs, inflation, and expenses, that yikes, more and more people are, having conversations like this on the internet. So we appreciate you hosting us on your podcast. And they realize what we're doing is not going to work. And we've started to realize that probably since 2008, as a large community, right? A country, like since 2008, this isn't going to work. And it's not going to provide for my family the way the last generation could have, because longevity wasn't the same, because inflation wasn't the same, et cetera. So that's the first thing that I'll say. I'll answer it kind of short right there. Is problem is, one, what we're currently on track to do is not going to create this at all.
Yeah. The only thing that I'd really add to that is I think there's one misconception, but it starts with a little bit of understanding. And so here's kind of what I'd say. If you really want to create generational wealth, the first thing you need to do is define it.
what exactly are you trying to create, right? So in my family, you mentioned it earlier, I've got some little kids running around in my family. I've got 3 of them. If my idea of generational wealth is just making sure that my little boy's got some money coming to him if I were to go, and that's my definition, it's not actually that hard in order to accomplish that goal. I can probably accomplish that one pretty quickly. If my goal for generational wealth, in my definition, the way that I define it, is to make sure that no, I want to have income and cash flow now. I want my kids to have income and cash flow. I want their kids to have income and cash flow based on what I do while I'm still here and alive. Well, now we're a little bit different. But now that I've defined it, right, it's an easier path to actually get it accomplished. Again, there's some quotes. Man, I've got a lot of quotes coming to my head, but I don't know
I'm normally the quote guy.
who to attribute them to this evening. But you've heard it. I'm sure you have. If you don't write it down, don't define it, then it's just a wish, right?
Yeah.
But if you write it down and define it, it can become a goal. Things that are goals, end goals, you can create paths in order to get to the end goal.
There you go.
So therefore, that's one of the first things you got to do, define it. And then my misconception is I think people think it's harder than it is. I definitely fell into that boat. Coming up, getting out of school, I just assumed that this is hard. I do not, because I don't know how to accomplish what I would like in life, then it has to be hard. If it was easy, I guess I'd know already. And I think that's a big misconception. Once you dedicate yourself to learning, a lot of these things become really easy. Now that I know, right? And so I think that's my big conception. People think it's harder than it is.
Thank you so much. That's a very, very good answer. I mean, it doesn't matter what it is that you do. If you don't know, you don't know how to move forward.
Yep.
A big thing as well is money was not something that we talked about, and kids just assume that it's something that you normally have. So I recall, just getting away from the subject a little bit, I was waiting my turn at an ATM machine, and behind me, a mother and kid were having a heated conversation, and the kid was probably asking for something, and the mother kept on saying, I don't really have that kind of money. And the kid asked the mother, why don't you go to the wall and get some money? I realized that the kid meant the ATM machine. It's all about education, and it's not that hard. Wealth building, as you said, is not as bad as we think it is, I should say. And what's important is being able to build legacy. You talk about your kids, and it's not just about living in the moment. You will want them to remember who you were once you go on, and legacy is a big part of that. Now, let's talk about financial management. Jeremiah, back to you. You mentioned going on a debt reduction spree after college. What prompted that decision, and what lesson did you learn?
I was broke and I was mad about it. So the first thing that I remember as I'm about to graduate school, 2006, December, I'm finishing school, is that I'm broke and the bills are about to start coming. My particular loan situation was February. February, the loans were going to start to be due, and I now owed money every month. And the coupon book that I was given at that time, so I could rip them off or turn them in with checks or however it was working at that time, was 60 months. Now, I was a communications major, so I hadn't done math since 11th grade. And so I didn't know how long 60 months was. So I had to write it down on paper to figure it out. And it was 5 years. It still is, I believe. Yep. Okay. And I was mad about that. I was going to be 27 at the time. I am paying this bill this whole time. I got very upset. So, people change. Here's one of those pithy principles in quotes. People change when the threat is too great to stay the same. So that's the moment that I had. The threat of staying the same was not going to work for me. So I had to do something. And over the course of about a year, I got very creative. I got very intensely focused about what my life was all about. And I paid off my bill. It was 10 grand. So for me, 10 grand could have been millions because I had $500 or so at the time that I graduated school. And I didn't have a job lined up for January or anything like that. So for me, it was intense focus and being upset, just deciding I wasn't going to live this way anymore. And the future that I wanted at 27, 37, 47 wasn't paying my future job money, my future income to someone else. I wasn't going to work for someone else's passive income. So that's kind of how it started for me. And there are a million different lessons that I learned in that time. One of them, not the least of which, is how many people on Facebook for the next year and the next year and the next year and still talk about paying off their loans. Well, I've been done with that for a long time. I also, about a year and a half after I paid everything off, I went on a world tour for about 15 months. I went on 10 major vacations, and that would not have been able to happen if I had still been in this debt. So I learned so many things about hustling and getting a job and paying my loans off first, because I would work. There was a few jobs that I was working, even in construction at that time, where I was getting paid on Friday, and if I got off early enough, I'd run the money straight to the loan office that I had to pay things back to, and I'd be just as cash poor as when I started the work week. So anyway, there's a lot of Burger King even comes up in here, because I remember almost crying a single tear as I drove past the Burger King at one time, and I could smell the sweet, salty sausage croissant witches that I could not afford to buy, and I was hungry. So we'll save many of the lessons and stories for later, but that's how it all started back in 2007.
Well, that is a very, very good lesson, because once you spend the money, you forget about it, not realizing that it is going to come back and bite you. I really appreciate your focus and your will to succeed and being consistent and disciplined, because being in your mid-20s and having access to money and not knowing how to use it, this is commendable. So thank you for that answer. Jonah, over to you now. With your banking background, what common financial management mistakes do you see people making with their cash flow?
Yeah, what a good, excuse me, what a good question. Man, when I was working at the regular and conventional bank, it's a big bank. You've probably heard of them before for sure. I know some banks aren't exactly everywhere, but this was a pretty big one.
This one is everywhere, I think.
Okay, this one's everywhere. So you've heard of this bank. I won't name drop it, but it was a regular bank I was working at. What I realized in seeing everyone's accounts, right? So what happens when people, whether they come into the bank or call over the phone, you type in their name and their information or whatever, and then you get a list of accounts is what you get, right? And then they ask their question: can I deposit here? Can I withdraw here? What happened here? Whatever it is, right? But what I realized is the same transactions were happening on multiple people's accounts. And secondly, I realized that there was this lack of management. There was this lack of money management was happening over and over and over. So just in case you're interested, a significant amount of people at this particular bank eat at Dunkin' Donuts in the morning.
Okay.
Right? It was about $3 and some change. I don't remember if it was $3.60 some cents or $3.90 some cents, but I am telling you, I worked at this bank for 2.5 years. I probably saw a $3 transaction from Dunkin' Donuts on easily 300 people's accounts. Okay. So and I'm not a Dunkin' Donuts person. I actually didn't even drink coffee then. So it was crazy to me. I was like, what in the world is happening? I would see the commercials and they'd say, America runs on Dunkin'. And I'd say, it does. This is crazy. How many people spend the money on this? So I saw that a lot. But what I also realized is how many people ended up calling the bank or being frustrated about overdraft fees and charges. And it happened so often. And I'm realizing, man, people are spending money they don't have. You talked about that a little bit earlier in the episode, living off those credit cards, the credit cards becoming part of the monthly budget, whatever it is. They're spending money they don't have, one, and they're not managing the money well. So many people would call or be upset and they'd say, no, I should have had $20, whatever it was, but I don't because this came out in the wrong order or whatever it was. I swiped this one first and swiped out. And I just started to realize, like, whoa, people are not taking control of their finances the way that they should be. And it's very apparent when you go through. Now, again, if you're sitting at your house or riding in your car listening to this episode and you don't work at a bank, you've probably got intricate details of what, 2 to 3 to 5 people's finances. So it might not be this big deal. But when you work at the bank and you're going to see,
5 people's finances in the hour that you're there. So over the course of a year or 2 years, I mean, this is 1,000 people's accounts that you see, you start to realize the trends and you go, oh my goodness, there's a lack of management here. There's a lack of budgeting.
Yep.
And it's big. It's
Yeah,
not one person.
you took it right out of my mouth. That thing called a budget is so important. And again, not being able to track your finances is a major crime. In my view, killing yourself by yourself,
That's it.
basically.
And
Right?
I just saw that firsthand working at the bank. And so that really helped me as I moved forward as a young man, right? I'm going, okay, well, I've seen the errors of other people's ways. Let's make sure that we fix that in my own personal life moving forward. And again, that carried over right into our business that we help people with now.
Yeah. And I'm taking this approach with this show because I want to get a message out here that it's not always about the money. It's about how you handle it, about how you know what you know how to do. Because people we tend to be at times very technical, and it's very easy. It's a financial mindset situation there. Make up your mind, understand what it is, know your purpose, like Jeremiah did. He wanted to pay his bills, and so he was focused. So he got paid, and his first stop was not, Burger King. Okay, so he went and paid his bills. So that's so great, and I love that message, and that's for our listeners, and particularly our younger listeners as well, so they understand, that money is not always money. What you have in the bank. It's also primarily about the mindset, and as they say, money is 80% emotional, and 20% practice, basically. So I have another question, and that's will be for both of you. So how has becoming fathers influence your perspective on financial management and planning, particularly in our community for our people? I would like to know your perspective on that.
Sure. Why don't I start with this one? I think a few things, right? When you've got, so here's the fun part about me being a dad. I've got 3 children. My oldest is 7 years old right now at the time of this recording, and he actually cares about math and money. So because he cares about math and money, some of the principles that I want to teach him, they have to get codified in my own mind first. Like what is the actual principle I want to teach him? You know what I mean? So it's like, yeah, I want him to know how to budget, but are there principles that I can teach him now while he's just 7 years old and is getting paid his few cents or dollar or whatever for doing his house chores and helping out around the office and things like that? What principles do I want him to know? When he says, let's go spend all the money that I've earned this week on, ice cream, is there a principle I can do? No. Do I want him to get ice cream? Of course. And I don't need him to spend all his money to get ice cream. I can buy him some ice cream. But is there a principle I want to teach him? Well, no, son, we want to save this much, spend this much. Like, what actually is it? And so those had to be codified in my own mind first. And I think that's been really, really, really helpful. So a funny story I'll share, actually, just this week, we had a new purchase in our house. It was just a dining room table. And my son, I was not home. My son tells my wife, asked her how much the table was. My wife gave the answer. He asked again, how much was it? My wife gave the answer. Now she's relaying the story to me. Right. I'm assuming he's going to say, you guys spent that much on a table. You should have bought Pokemon cards. I'm assuming this is where we're going. And my 7-year-old says, Mom, Dad, you guys did a great job budgeting for this table. This is a good purchase. And then left. And I thought to myself, perfect.
Principle.
Yeah. Awesome.
Principle executed. Mission
right.
accomplished.
At 7 years old, he knew that we knew, how much was it? How much did we spend on it? What was the value that we got from it? You know what I mean? And I love that about it. But that's really my biggest principle. Like, it codified it for me. What exactly am I teaching them? And that was really important.
Okay, I'll answer a little bit differently. Jonah told a story, but I'm going to start with a story, but I'm going to go more broad and go for a concept since he got a good story in. But just yesterday, it was my birthday yesterday.
Oh,
At the
happy
time we're recording
belated.
this, thank you. And my oldest boy, our oldest boy is 8. And what I bought for them this weekend. So my birthday, bought a family gift as a foosball table. Did I tell you this already?
Yeah, you told me you were going to get one.
So I got a foosball table. They hadn't seen it yet, so they didn't know that it was waiting at the house. And my boys were guessing what it was that I got them. And they were like, does it have balls you put in a hole and you have sticks? And I was like, yes, 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 yes. I did not realize they couldn't remember what a pool table was. They thought it was a pool table. And so I kept saying, yes, 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 yes. But when my oldest son thought that it was a pool table that I got, he was like, what a waste of money. So the exact opposite of his favorite cousin was what a waste of money, because he didn't care about a pool table. But foosball, don't worry. They love the foosball. There's 3 boys and me, so we can play, a foursome, and it's a great time. So I'll go a little bit more conceptual here. And my children know that they have banks. We call what we do and what we teach on a personal level banking. And they know they have banks. And one thing that Jonah has said recently in a lot of interviews that we've been able to do and a lot of coaching calls that we do all the time, we talk to people for free to help coach them through their cash flow, and a conversation about that is value of effort or work or the money, something like that. So when your kids are younger, normally we're probably trying to equate value and effort, right? Maybe we don't want to work hard when you're 41. That's what I just turned. But when you're 8, you got to learn to work hard. So I'm going to make them do stuff. So when they put effort into something that brings someone or something value, they can earn money. And we put that into their own banks. So these contracts, these banks that we have, there are one on each of my 4 children, and they know they've got money in there. And they know that they can get to that money. If dad says it's okay, he can release some of that money for their Pokemon or their Beyblades they're into now, some sort of spinning toy that both his kids and my kids are all into. But I think that is very important for them to understand. And we'll get into that, I'm sure, coming up in your questions, the banking type of system that they're using. So they can leverage money that they have in their reservoir, in their pool, and they can leverage that for stuff. But there's only money in there if they can create value for other people.
Absolutely. Great answer. And I like the thing about the Beyblade, right? I'm a grandmother.
Too. Everybody is going around.
When the grandsons visit, I have to get an education. I knew about the Pokemon card. My son is 36. But this was a big thing when he was a kid.
There's a brother between us, actually. He's not in the business with us, and he was the big Pokemon guy. So 100%. What's crazy is he's turning 39 this year. So right in that age range with your son. I love it.
Yeah. Continuing with financial management, I have 2 more questions for you. Can you share a success story on how financial management strategies helped transform a client's financial situation?
This is one we have 1,000 stories for, so it might be tough to come up with just one, but I'm gonna kick it to Jonah. That's exactly what he did full time for years into this business before I was even full time, and we teamed up completely after 2020. But that's what we do. We help people all the time with that.
Yeah. So like Jeremiah mentioned a little bit earlier in the episode, we do these cash consultations is what we call them. And they're completely free of charge. But the whole point and gist of having the conversation is to set a plan in place, some plan that you can follow, and a plan that's going to help you accomplish your goals. So we've done this multiple times with multiple different people. I think that the most beneficial and rewarding goal accomplishment for a person, a client, is the debt payoff situation. And at one point I was counting, or I don't think I was ever counting, but at some point someone asked me, how many people do you think, you've helped pay off their debts? And my best recollection was somewhere in the 200s or 300s is how many people it has been. So that to me is exciting. I probably should have counted,
right?
My fault.
Yeah.
I wasn't, I wasn't thinking about later on, I'm going to be on a podcast episode.
Right.
They're going to ask me,
you got to write this stuff down. Now.
Right. Well, I wasn't thinking that, right. I was just trying to help somebody, but I have seen it in all sorts of different ways. So that's, whether it's just the student loans, that's a big one, especially these days, to have someone pay off their the complete student loans. We've got a friend and a person who's working with us who just did that recently, like in the last month. They paid off all their student loans, and that's a big deal. Whether it's the student loans, whether it's the house, whether it's the cars, whether it's the credit cards. The big thing about it, of course, and the big rewarding thing is just seeing the person, the client, and how different, happy, new things they can move on and move toward after that. You would be surprised at how big of a weight it is. Maybe you wouldn't be surprised, but it's like this humongous weight when you don't have to log in to, studentloans.gov anymore. People love it. and I love that for them. So I gave more of a generic broad thing as opposed to a specific example, but man, helping people accomplish that debt payoff goal is really rewarding for me, of course, but most importantly for them. They're the ones who had the debt and paid it off. So
yep, that's definitely what you call financial transformation.
Yep.
One more quick question before we get into the infinite banking concept. And I know we're having some great conversation, but we'll need to get to that because that's a core of this podcast episode. So tell me, what role does financial education play in your work? And how do you make complex concepts accessible to your clients? Because we are not talking about basic banking or financial principles.
I'll start. I'll let you finish. So again, I got another quote or whatever it is, old saying, right? But people talk about the way that you really know that you know something is if you can then teach it. And so here's what happened. Here's kind of the story of this financial education genesis and us working together in our company. I was helping people one-on-one with these cash conversations I just mentioned, helping them accomplish their goals. And I started to realize that very similar to my banking thing, right? I started to realize that multiple people were asking the same questions. I started to see the trends. And because of that, I am, just like everybody else, I'm going, how in the world can I help these people get answers to their questions without me having to talk to all of them if they keep asking the same questions, right? I'd rather talk to you specifically about your specific situation as opposed to the generic question that I always get, right? And so this is where the idea of our company was born. But realistically, what happened was I started to realize that, man, if they're always asking me the same question, I should think of or come up with a way to explain that or answer that makes them get it, one, but also is going to be like more cemented in their mind. They're not going to forget. And so what we ended up doing for some really complex topics is break it down with visuals, which is really helpful, and also break it down with real life examples. So not so much like taking someone else's example and telling this person about the example, but like put yourself in these shoes. Every Friday you get a paycheck. Yes. Everyone's yeah. Okay. Where does it go? It goes in the bank, that sort of thing, walking them through like the scenario, the real life scenario. And that we've found that that's been really helpful for people. I mean, multiple times a week, I at least get someone saying, man, that thing was really complicated. Thank you for explaining it. I totally get it now. And I think that goes a long way.
Yeah. So we get a lot. One of the reasons that our system, and we call our system, the beginning starting point of that is called the save and spend system. We teach people how to save and spend money at the exact same time. So when we get into this thing we've been alluding to, infinite banking, that could mean anything because I don't understand what that concept is in the terms. Infinite banking. I don't know what that means. But I'm going to show you, MJ, how to save and spend money at the exact same time. People can start there.
Yep.
So the reason it came about actually is because we were students of this process ourselves, and we did not know how it worked. We did not know how to explain it. So it took us a little bit of time to figure out how in the world can we help other people understand something in a way that will let them shorten and collapse the time frame it took us. honestly, it took me about 4 years of doing this process to really fully understand it. Jonah probably got it a little bit earlier, probably like not a little bit, probably like 25% earlier, probably like a year earlier than me. It's because he was teaching it to and having to talk people through it all the time. But at about the 4-year mark, we came up with some of our product visuals and examples. We have this one familiar thing to the people who work with us. Everybody's seen us on our socials. They've seen the slides. They've watched the videos of the 3-cup setup. We don't have them in here in our podcast studio chatting with you today, but literal 3 glasses. And a 4th little shot glass as well. And we put money in and out of these cups, and we talk about them. They're labeled, they're color coded, and it helps people understand what's really going on. Nelson Nash, the founder of the concept, the developer of the infinite banking concept, has another great quote. If people know what's going on, then they'll know what to do. And we said, if we're going to be an educational company, financial management and wealth needs to be talked about. I know you've said that so many times on some of your other episodes. The women you're empowering are to be having conversations now. Let's talk about it. Let's get into a mode of community around these things that used to be taboo or we didn't grow up around. Well, we need people to kind of have an icon to anchor on. So we actually literally have cups and glasses and money that goes in and out of them. So that's really, really helpful for us. So the 3-cup setup, the save and spend system, breaking it down into a way people can go, that sounds interesting. If I can save and spend money at the same time, sounds a little crazy, but I'm at least going to show up to watch this house burn. But they'll show up, right? Because they'll go, all right, save and spend, that sounds interesting. So
I totally agree. And I like the concept because one thing that strikes me always is the whole financial literacy thing, right? And as I said to people, it's a big difference between financial literacy and financial education. How could you be literate about something that you don't know about?
Right. I always say that, I grew up in, American schools, several different schools. Our dad was in the Army, so I went to a bunch, and I went to math class pretty much every day. Yes, we all did. And in this country, when you go to math class, starting from counting numbers and worksheets in your pre-kindergarten years, all the way through college, but I took mass communication. I was in a math class of some sort every day. And other than counting up quarters and dimes and nickels for a couple of weeks in 2nd grade, and then you get to your 11th year, and in the 11th year, you do 1 week of consumer math. The rest of the time, math never talked about money. They taught me about triangles and circles and squares the whole time. But now I need to know about money, right? I needed to know then. I still need to know now, but I'm actually better at triangles and circles and squares because that's the math they talked about. And pretty sure my phone does all that stuff for me. I need to understand taxes. I need to understand debt, leverage, credit cards. I need to understand interest. I need to understand mortgages. That's the world I actually live in, and I need to be educated on. So we are going to handle and do our best for financial education so people can become literate, just like you said.
Yeah, totally. Thank you so much. Now we are going to be addressing the infinite banking concept. So, Jonah, you discovered IBC, it's short for infinite banking concept, in 2016, from what you said, right? What made you realize this was something you needed to share with others?
Yeah. Man, so I mentioned earlier the job that I had at the banking institution. What I failed to mention is that after my 2.5 years there, I switched into a profession of doing auto and home insurance. So they call that property and casualty, or P&C insurance. And again, working for a very prominent company. You've heard of this company. No need to talk about it. You've seen their commercials. Okay. So I go into this meeting where someone has asked me to sit here for an hour and listen to this gentleman. I don't believe that maybe they've told me what it's about, but what they've said is that it's important, and I respected the person who invited me. So therefore I'm going to sit and listen. During the meeting, they talk about the infinite banking concept, using whole life insurance as your own personal and private bank.
The crazy part about this experience, of course, is those are the two fields that I have my experience in as a person graduating from college, came out, I've got two jobs in my life, and they both, one at the bank and the second in the insurance field. So when they're talking about some of the attributes of insurance products and policies, I knew some of those attributes to be absolutely true. When they're talking about some of the attributes of the conventional bank, well, I know some of these are absolutely true. And when they talk about combining them and using insurance as your own personal and private bank, I'm saying you didn't combine anything that I didn't already know was true. Therefore, it wasn't very much of a hurdle for me to learn more about like I didn't have to jump over and fight my own understanding about the way money was flowing. That's not where I had to fight. Now, did I know everything about the infinite banking concept? No. And so I still had things to learn, but I just wasn't fighting the foundational principle of what they were talking about. And so that was really, really helpful. But realistically, to answer your question, when someone introduced infinite banking to me, it just happened to be the two fields that I had the experience in. And so it just hit home right away because I was like, well, I know that and I know this, and now they combined it. So I'm like, it's got to work like that. I already knew those things, that sort of thing.
And that's why I brought him to the meeting, because I didn't know what they were talking about. So I was excited. I saw some numbers going up, but I did not quite grasp the concept for a while.
Well, sometimes they call this thing divine intervention, right? You had the pieces, they were there, and it was just a matter of connecting the dots for you, it seems, Jonah. So, Jeremiah, you mentioned that your initial research into IBC, and I'm quoting you, was mucho confusing.
Yeah.
How have you simplified the concept for others?
One of the things that we have done is we have put all of this information out there on what the infinite, which is an infinite thing. Yes, that means never ending. That means it's a infinite and concept. I mean, sky's the limit, or it's not the limit because it's infinite. We have condensed this down into one slideshow, an hour-long video format slideshow for all of your listeners, or we do it from stage. What is the infinite banking concept? So we had a model that was how we saw it, like Jonah said, seeing a guy in front of the room, kind of walk through it. And over time, we actually teamed up with that guy and we stole his model of teaching it in front of the room in 90 minutes to a slideshow presentation or a video presentation. And that's what we did. We said everything out there that this could be, infinite concept. Banking is kind of the noun in the middle, which is a verb. And we're going to show you how it works. We're going to put it in 1 hour for you to try to help you. So that's what we did. It took us a little bit of time and iterations to come up with what we have now. We call it the save and spend system. So that's kind of our flagship 101 on what infinite banking is all about. But that's what we did. We said, if we take this idea and this idea and this idea and this idea that are probably concrete in your mind, we can help you understand that what you're missing out on, there is a problem you have in your life. It's 3 P's. There's a problem that you have in your life. There is a product that will fix that problem if you follow this process. And that's what it's all about. So what we're trying to do here is not overemphasize numbers. We're not trying to overemphasize the numbers that you might want to use. Do you have to have $10,000? Do you have to have $100,000? Are you 6 years old or 65 years old? That is not what we focus on. We focus on bringing this into places where people can go, oh, this will fix my problem when it comes to debt, student loans, car purchases, saving up for the long term in retirement, or everything else in between, going on vacation, that type of thing. So that's really what we've done. And we've noticed that many great people, some of which we're really good friends with, emphasize numbers. And that's totally fine. There's a place for that. And in the world of what we're doing in financial education to help people build wealth and have a generational legacy, you're going to need to talk about some numbers. Some people are going to need to do that. We've chosen to help people who are starting at a similar point mentally that we were starting at. We wanted to be wealthy. We wanted to have generational wealth. We wanted to figure out how to get money right, but we just don't know much about this. So that's kind of our the genesis of how we get down to our process.
I love it. I love it. Talking about the saving spend system and talking about the 3 P's, the problem, then the product, and the process. This is definitely an equation for success. Doesn't matter how you put it, right? We're singing from the same hymn book when it comes to that. It's not so much the dollar amount, is understanding the process. And once you understand it, the sky's the limit, as they say, basically. Now, let's continue to define the infinite banking concept. Can you explain how high cash value whole life insurance works as a private banking system? This is the main thing here. I want the audience to completely understand what that is all about. So try to answer that in simple terms, because I think that's a great concept. So let's take the audience through the concept.
Fortunately for you and your audience and everybody that we talk to, simple is what we do best. So we have cracked that code, and we're going to help you understand your cash flow when it comes to the infinite banking concept. What does this mean? Well, first off, I'm going to hit you with another alliteration here. We're going to talk about the culture of control of your cash. We are going to put you in control of your cash. And first, before we save you, I'm going to use church terms. We got to make sure you know you're a sinner. We got to make sure you know you're lost. So that's where we introduce the problem. The problem is banking is happening in everyone's life. And if you don't control it, which 99% of people do not, you are bleeding money out like crazy. Okay, so if you don't understand that, you will get hyped up on numbers. I'm not going to give you numbers on this podcast. So either you're about to understand or you're about to miss it because you didn't figure out what the problem was. Okay, everybody is in the banking business, but they probably gave away the control of that banking to one of those big banks that like Jonah works for. It might be Wells, it might be Bank of America, City Chase, and all those folks. They actually control banking. Now realize this, MJ, and a listener, that you do the work, you deposit money in this bank. It's your money, but they have it. You borrow against that bank by getting mortgages and car loans and student loans and personal loans and business loans, or you spend your cash and you don't have it in there anymore. You take on risk to buy things that you have to pay back an interest for. Well, those are two things. I'm sorry. You take on the risk because you go buy things, you use your money, then you have to go back to work and all that, and you pay interest. And the bank gets it. So one character in this play, there are 6 things that just happen, 6 verbs. You work, you put money in, you take it out, or you leverage or borrow. You take on risk because you now owe them interest and you have to pay them more back. Okay, but they get rich. There are 6 characters in the play. You play 5 of them. And the one that gets rich and wealthy and generational wealth is not you. So how about them apples, as they say, right? That's what we've got to help folks understand. Most people are actually losing money out the back door like crazy, more than they could ever hope to get in their 401ks and their qualified plans in retirement. There's no chance. You're losing too much money. Most people never recognize this. What we spend our time doing in the first half of our entire save and spend presentation is introducing the problem. Because if you understand what the problem is, the product and the process will make sense shortly. Jonah can talk about that a little bit, but there is a massive problem first, and we are all losing money like crazy because we are not the bank. And the product actually says you can be that bank. You can be the 6th character.
Yeah. So I'll talk about the product a little bit here now that Jeremiah introduced the problem. The product that we use is dividend paying whole life insurance from a mutual company. Each word that I said is really important, so I'll kind of break it down. Dividend paying is the first thing that I mentioned. So I want to put this up against dividend paying comes from mutually owned companies. So I want to put a mutually owned company up against a stock owned company. Stock-owned companies, you probably know this from maybe some of the things that you've done in the stock market or whatever else you like to dabble in. But stock-owned companies do not give out dividends. Only mutually owned companies do. Stock-owned companies have stockholders. And so if they make a profit, which most companies do, they at least try really hard to, they give all those profits to the shareholders, the stockholders. Mutually owned companies who make a profit, which most companies do, or they try really hard to, right? And that's what a company's in business for. When they have a profit, they give the profit back to the policyholders. So the reason we want dividend paying companies, the first thing I said, is because you're going to end up with a profit once a year. That's important. Then I said we want to use whole life insurance. Now, this is really important. There are a lot of different types of insurance out there, okay? There are dental insurance and health insurance and car insurance and phone insurance and pet insurance and airline insurance. I mean, I can keep naming them. They're crazy. But here's the key about insurance. All of those other insurances are if insurances. And here's what I mean. You do not automatically get a check for having phone insurance, but you will get a check if you drop your phone in the toilet or you crack that screen. You do not automatically get a check for your health insurance, but you will get a check if you go to a doctor that's in the right network. You don't automatically get a check for your airline insurance, but you will get a check if the airline cancels the flight. See, whole life insurance, there is not an if. It's actually a when. It's in the name, folks. Whole life insurance.
Right.
This is not a if you pass away. This is just a when you pass away. So whole life insurance is one of the only insurances that guarantees the check at the end. This is really important. So now I've got a product that has a guaranteed payout at the end that's going to give me a bonus, a dividend at least once a year from a mutual company, right? So the cool thing about that is we can actually design policies. When I say that, I don't want to confuse. What I mean is we can put on options, we can take off options on the policy that allow you, the consumer, to access some of that future death benefit payout that is guaranteed to show up when you pass away early. And that's what we actually do. The cool part about that is that it's not a deduction from what you've paid into or purchased the policy for, right? If you pay money for something and you turn around and go back to that thing and take your money out, I think they call that a withdrawal as opposed to anything else. But if you pay money for something and there's a big pool of change, right? Big pool of money they're going to give you one day and they say, well, you can have some of it early. By no means is that a withdrawal. That pool was not mine to begin with, and that's what we access. That's why we call this method the save and spend system, because there are some contractual guarantees that you get, the person who purchases the policy, when you pay the money for the policy, that very well mimic those of a savings account, saving your money. While at the same time, you've got access to this big pool that you can leverage early and spend the insurance company's money. And so that's what we like to dive into as the product in our save and spend process. Now, I'll let Jeremiah go back into the process.
All right. So the process now is utilizing this product as a bank. It's going to solve the problem that I introduced. So to go over that kind of quickly, because that's the part that probably does take some visual and does take a walkthrough for people. What we're going to do is we're going to borrow the insurance company's money and we're going to start to finance or spend it on the things we have to buy anyway. So this is going to be houses and cars and food and bills and everything else, student loans. And so we are going to be able to access more and more guaranteed income tax-free pools of someone else's money to do the things that we were going to do anyway. Our money continues to have guarantees. And MJ, this is where a user needs to understand that when you borrow theirs, yours still is there inside the insurance company with the contractual guarantees. And those guarantees are your money cannot go down. There is no investment. Notice we have not used that word on this podcast. It's not an investment. It's insurance. They're actually pretty much the opposite of each other. Number two, the dollars you put in have to buy lots of money. We talked about that. Number three, there's an increasing cash portion you contractually have access to, and it's income tax free. You can use it for anything. And number four, the policy never costs more. The policy does not go up. This is whole life, capital W, life insurance. So the death benefit does not go down. The cost of the policy does not go up as you age. There are other insurances that do that. Some people are so familiar with those, they would not assume those things are true unless I told you. So those 4 guarantees are still happening, and that process will allow you to have an ever increasing pool of money with your name on it to buy cars, to pay off your taxes, to leverage for retirement. And that's why Jonah, circle here, at the beginning, talked about the difference between a nest egg idea and a cash flow idea. If I always have more increasing income tax free liquid cash flow, well, I don't care if I have a nest egg at all.
Thank you for explaining the concept. But there is one thing that I would like for you guys to quickly touch on, and I know we're on top of the hour already, but I'm going to make a decision and go a little longer if that's okay with you.
Hey, we're ready for
Let's
it.
do it.
One thing that I want the audience to really get is that, as you said, insurance is protection, right? It is definitely not investment. So that's number one. The audience must understand that we are talking about insurance and there are some requirements, right? So please explain the underwriting process and that the IBC is a long-term proposition. So it's not about putting in a few dollars. You must qualify first for such a product and not expect to have mega return in a few months or even a few years. All right. In addition, consistency and discipline are key because there is a requirement to pay a premium. So please break it down and put it in simple terms for the audience so that they understand that this is not a get rich quick scheme where they could put a few dimes in and then in a very short time become billionaires. So I really want to demystify this and make sure that the audience understands what they're getting into, because we're not talking about crypto here or basic investments. So let's tell the audience a little bit more about that.
Sure. Why don't I do the underwriting and I'll let you talk about the cash flow. Okay. All right. So underwriting, what we mean by that is that in order to get an infinite banking policy, you do have to be approved for a whole life insurance policy, because that's where the infinite banking concept, that's the product we're going to use, the whole life insurance, like I just explained. So many people realize that with a whole life insurance product, the insurance company is going to ask you to for your height, for your weight, maybe your blood pressure. They're going to check to see if you've got any life-threatening diseases. They're going to make sure that you actually qualify. So here's a good way to put it. If you are planning to pass away because of the thing that's afflicting your body in the next few years, the insurance company probably doesn't want to give you life insurance. They're probably going to say, no, we're okay. We're going to pass on this one, right? Okay, so even more down to earth, if you've got the neck, the back, the shoulders, the hips, the whatever, and you are not going to qualify for insurance, you might be thinking that that means I can't do the infinite banking concept. But that's actually not the case. Now, you may not qualify for insurance. That may be true. But in order to practice the infinite banking concept, what you need is to have access to the insurance policy. And that could mean that maybe you won't qualify, but maybe your spouse will, or maybe your children will. Jeremiah mentioned that a little bit earlier in the episode. He said all of his children have these insurance policies and they call them banks, their personal banks. That means that Jeremiah himself did not have to do the physical in order to get that policy. The child is the one who was the insured person. And thankfully for us, children don't normally have to go through any of those physical things. So it's a lot easier to get that policy. But we do want to be so clear. You do have to qualify for life insurance. And if you've got some sort of ailment that'll keep you out of life insurance, that stinks. But that doesn't actually mean you're not going to be able to practice the infinite banking concept. On the contrary, we can insure a spouse, a child, a parent, we can continue moving like that to get you a policy that you can control. Now I'll talk about the cash flow part. So I understand that you've jumped to some conclusions that kind of head off the newbie or the person who is searching this type of stuff online, MJ. But when we're talking about whole life insurance, capital W, what would make anybody think that that's get rich quick? Whole life. This is something that is going to be a long-term play.
Rule number one, according to Nelson Nash's 5 rules in implementing, understanding, practicing this concept, is think long term, think long range. So whole life insurance, we are going to put our money into banks or life insurance, if you understand what's going on over here, for your whole life. That was a given anyway. We are going to leverage it all the time, and there's going to be more and more and more of it. And because this is a whole life thing that's always compounding, there's uninterrupted compounding interest on the dollars you put in. Remember, we talked about that, because it kicks off more and more and more and more of their cash, which is called cash value. It's going to keep moving for you for your whole life. It's always going to get better. So the day you die will be the most money. If you die tomorrow, that'll be the most money. If you die when you're 115, that'll be the most money. There's always going to be more. So I think folks are getting thrown off because they start to follow what they want to hear rather than look at the real definitions, rather than look at the product, rather than look at the illustrations they hand you. So the insurance company, fortunately, gives us all of the guarantees on paper before we start. We go over that with people for free, of course, in our cash consultation environment. Once we get you approved, we're going to walk you through that type of stuff. So ladies and gentlemen, understand that this is a banking system. This is not an investing strategy. I'll say it 14 more times just till you get it. Your money already goes in a bank. That's not your investment strategy.
Yes.
You put money in there so you can swipe on Amazon. We're going to use whole life insurance as your reservoir, as your bank. This product, although tons of sexy features that keep going up income tax free, is not the investment strategy. This is where the money is for you. So hopefully that helps some people out there. And you just got to make sure you're working with folks who are actually teaching and preaching this. And if they're not doing it themselves, to know and to not do is to not know. So we have lots of policies. We help people with this primarily exclusively, and it's a boutique shop. We love to walk people through what they thought was happening and what someone else told them and some paperwork they got from another office.
Yeah, that's really great, because I like to be transparent so people understand totally what it is that you guys are offering, which is, to me, once you understand the concept, it's a no-brainer, for lack of a better term. So thank you so much, guys, for clarifying and explaining the concept itself. So through your journey, what are the most common objections you hear about, and how do you address them?
It's a great question. The objections are very much universal, and they come in flavors of, number one, we kind of talked about it. Hey, what if I don't qualify for insurance? Jonah kind of covered that one.
Yeah.
Okay. You have to be alive, and you probably can't be dying tomorrow. We won't be able to help you get a policy on your person. Another one is, hey, I can get a better rate of return elsewhere. I covered that without covering that. So if you're worried or concerned about that level of rising cash and you could get more money elsewhere, what we're going to help walk and talk people through is, this is where we keep our dollars, not where we invest them. And you already have your money sitting in a bank. Now we're just going to transfer that bank on the corner by Waffle House and CVS to the insurance company bank of whole life insurance. So this is not an investment strategy. Another common misconception is, I don't know, probably the confusion around how to use it. Sounds complicated because lots of people kind of abdicate their responsibility of understanding what Duncan is really doing to their bank account. So they don't want to think about it. And so this process, because we are going to do something, we're going to act like the bank, mimic the bank, be the bank. This process is probably not for people who, like you said, MJ, are lazy. They're not going to think about it. There is some discipline that's involved. That's the word you use. So we're going to help a lot of people who are long-term thinkers. They are business owners. Business owners seem to pick up on this quicker. And folks who know that the future possibilities of losing their money in other programs and products or whatever is something they don't want to play with. That's going to be a great candidate to work with us and get on a cash consultation with us. So those are some objections. I don't know if, Jonah, you have any more. I think you covered it. The only one that I hear often, and the one that resonated with me most, is just assuming that I didn't have enough money to do it.
Oh, yeah.
That was a big one for me. When the person in front of the room who was talking to me back 9 or 10 years ago now about infinite banking was explaining infinite banking, they were talking about paying off millions of dollars worth of debt and making purchases that I could never dream about. They were literally buying a plane, and I just was like, I'm not. We're
No
we're
chance,
we're
right?
not in the same category right
Right.
now.
That's a good point.
You know, I do have the dentist bill I'd like to pay off. Does that
But
apply
it's
as well?
$600. Like,
Yeah, yeah,
is
yeah.
does that count around
Yeah.
here?
And
Yeah.
so I just assumed I don't have, I can't do it. You got to be wealthy. You got to be. I just assume that, and that's just not the case. It's just not the case. Again, that's part of the reason we've given you as little numbers as we can give in a podcast episode. We haven't said anything except over and over that we have free cash consultations. That's part of why we do this. We want to talk to you if you want to talk to us, and we'll walk you through your situation, your values, your cash flow, because this process can work for everybody. Everybody has banking going on in their life, and everybody should take back control of it.
Thank you so much for clarifying, because we want people to walk away knowing that I could go in here and I understand exactly what I'm up against or what's in it for me. So my last question to you guys is, looking ahead, how do you see IBC evolving as a wealth building strategy in today's changing financial landscape?
Great question. Another quote. I'm botched this one for sure. But first, the concept is misunderstood, then it's brutally opposed, and then it's kind of generally accepted as, oh, this is what should be done. I think over the course of the information age that we're getting into and AI technology, you can look up infinite banking concept and get Siri, Google, Alexa, Elon, whoever's running those things to actually explain most of what we talked about on this podcast to you on your computer right now for free. It can condense this if you use the right terms, and you're at least not just a beginner in using a computer for AI. They could explain this type of stuff. So what's probably going to evolve over the course of time is more and more people are going to realize what infinite banking could be. What's probably going to continue to mess them up is the differences in products and how they're structured. So remember, there are other types of insurance, and there is a common product in universal life that is very popular in the life insurance space that's often touted as an option for the infinite banking concept. According to the founder, according to the legacy organization of the infinite banking concept developer, universal life cannot be used for infinite banking. That'll throw people off like crazy. And some of you who have actually braved an entire hour, 10 minutes with us just got your mind blown because you just heard that for the first time. Like, wait a minute. I heard that universal. Wait, they never said universal, did they? They said whole, and we're saying it again. So in the future, I think more and more people are going to understand it and do it. I also think that more and more people are going to realize that their traditional systems of thinking, let me change that word, to typical systems of thinking and what they're doing in their 401ks and their jobs just aren't going to be enough for them. They're going to have to do something different. They're going to have to try something else. And so they're just going to be more open to this idea, I think, as the next generation of YouTube famous people and TikTok influencers kind of like age into the workforce and get older and have kids. There's going to be more and more people who are going to go like, yeah, I'm willing to listen and to learn my financial education online.
Great. Thank you so much, guys. And as we wrap up today's episode, Jonah and Jeremiah, I want to sincerely thank you for sharing your wisdom and experience with us today. Your practical approach to wealth building, financial management, and the infinite banking concept have made these complex topics much more accessible for our listeners. So before we wrap up, I know many of our listeners are probably eager to learn more about implementing these strategies in their own lives. So for those who are interested in working with you or learning more, what's the best way to reach out and connect with you and access your services?
Absolutely. You can find us on all social platforms. That's your Facebooks and your Instagrams and your YouTubes. Our handle there is The Banking Bros. The Banking Bros. That's Jeremiah and myself. We shoot lots of content there. You can always find us there.
Yeah,
If you're
I have your information scrolling down, I think.
I
At the
love it.
bottom of
Yep.
this.
I totally see that. And of
Yeah.
course, if you want to go
Mhm.
directly to our website so you can watch our hour-long presentation, jump right into the information, you can do that. And that is saveandspendsystem.com. Saveandspendsystem.com. Again, you'll be able to get there from thebankingbros.com or from one of our social handles. You can click the link in our description, but that's how you can find us. The Banking Bros on all social media platforms, and saveandspendsystem.com for our flagship 1 hour explanation of what the infinite banking concept is all about.
Excellent. And for our listeners, we'll make sure to include all of these contact detail in our show notes. So whether or not you are starting your financial journey or looking to optimize your wealth building strategy, reaching out to Jonah and Jeremiah could be your first step toward financial transformation. And to our listeners, if today's conversation has sparked your interest in taking control of your financial future, here are some ways you can take action. First, you can learn more about the Dew Brothers educational platform, as you mentioned, by visiting their website, and the information is scrolling at the bottom of the screen. And they offer free resources, as they mentioned, that break down these complex concepts into actionable steps. Second, if you are ready to explore how the infinite banking concept could work for your family, Jonah and Jeremiah offer complimentary strategy sessions, and they were very clear about it, where they can assess your unique situation and help create a customized plan. And finally, don't forget to subscribe to the Merging Life and Money Show wherever you get your podcast so you never miss an episode filled with valuable insights just like this. Jonah, Jeremiah, before we sign off, would you like to share one final piece of advice with our listeners who are just starting their financial independence journey?
There's a lot of topics out there, ladies and gentlemen, and you can go a mile wide and only an inch deep, but you probably need to go deep on one or two strategies. And we want to challenge you with this idea. If that one strategy is a foundational tool where your money is guaranteed to grow in cash flow, we think you should check out the Save and Spend system.
Thank you both again for sharing your wisdom with us today. And to our listeners, remember, building wealth is not just about making money. It's about creating a legacy that will benefit generations to come. I am your host, Marie-Jo César, and this has been the Merging Life and Money Show. Until the next episode, continue merging life and money. Bye for now.